Okay, so let's get started. To start with, why weekly options? And, a lot of our core strategies are trades that we are entering between 30 and 60 days to expiration. And what you're looking at here is the time premium on this axis and then the days to expiration on the bottom axis. And so what you're looking at here is one of the reasons we don't enter trades way out here with 90 days is because look how flat that time decay curve is. This is your theta. This is your time decay of those options. And so when you're selling options way out here, the time decay is very, very slow, and then it starts to accelerate as you get closer and closer to expiration. Well, part of the reason that we trade when we enter in this 60 to 30 days is because that's when you catch a real good chunk, a real good acceleration, a real good bang for your buck as far as theta decay. Now, the other piece of this is, if you look here, which we'll be talking about today, is look what happens in the last week. I mean, the time decay just falls off a cliff, right? But that doesn't tell the whole story. There's always a relationship between risk and reward. And so one of the reasons that we do these is because, A, they take less management out here in that 30 to 60 day range, but also the amount of decay versus your gamma or your risk is really, really good, okay? But our focus today is on these weekly options in the last week of those options and trying to capture that time decay, that fast time decay where the value of those options just falls off a cliff. They just decay extremely fast. And we want to show you how to take advantage of that and still minimize your risk. And that's the key. The returns are great, winning trades are great, but you also have to focus on how to manage losers. And that's what we're going to do today. So a little bit more about why weekly options. First of all, weekly options have become extremely popular. They were created in 2005, but the volume has just really gravitated a lot into those, and now to a point where the volume makes up over 30% of all options. Okay, so there's a lot of liquidity in some of these symbols, and it makes them a viable trading vehicle. The other thing is, with these, and what we'll show you is you're going to be able to profit in these within 6 to 7 days. Instead of waiting, our monthly ones, sometimes you're in the trade for a couple weeks, sometimes up to 30 days. If we're rolling or adjusting out to the next expiration, it goes even beyond 30 days, right? So what we're going to talk about is how to profit within 6 to 7 days using the strategies that we're going to teach. Keep in mind, these weekly option strategies do not replace our monthly income strategies, okay? Those are still our core strategies that we will continue to trade month in, month out, day in, day out. But this is a very great complement to our monthly strategies. And the reason is we're adding these additional strategies at different price levels and different expiration cycles. We always talk about diversification. Not only do you want to diversify the symbols that you trade, but you want to diversify the strategies that you trade, and you also want to diversify the amount of time in the trade. And that is what this is all about. It's adding another arrow in our quiver, and it's adding another strategy to our overall portfolio.